Hi friends, let's start with today's analysis. I think a very fascinating day of markets today, not only in India but I think over the world. And it has been fascinating because of many reasons. And I think a lot of things are happening around the world which are affecting the stock markets. Some are short term, some are medium term, some are long term. So we'll discuss all these things, but probably in brief, not to the fullest extent because then it makes our video longer, and that's not what we actually want. So we'll start with the global indexes and how the global environment is around us, and then we come to the Indian market as well. So yesterday we had a surprising move from Dow actually in the night when it at one point of time it actually fall around 850 points, and Nasdaq was also on the similar kind of percentage fall, and so was S&P, and that was really worrisome because it was a huge fall. Actually, markets were getting nervous in whatever Mr. Trump was doing, and their own markets where Mr. Trump wants America to become great again. It was actually going against the notions and against the beliefs of US stock markets, and we saw a major fall in the stock markets. Although a recovery happened, and Nasdaq at one point of time actually came in green also, and the Dow also recovered to just 300 points down at one point of time, but eventually they all closed in red, and mostly Dow it closed around 650 points down. And that is the reason why HS Nifty was also showing around 120, points down at one point of time. But in the morning, the Dow futures were up by around 200 points, and so was Nasdaq futures by a similar percentage. And that is why there was slight respite in terms of SGS Nifty, and we were showing around 80, 90 points down. But with whatever fall happened in the US markets, Asian market, when they opened today, they opened in red, but they all came in green. So whether it was Shanghai, whether it was Hang Seng, whether it was Nikkei, whether it was Kospi, Australian markets, all markets of Asian countries were actually trading in green, which gave us also confidence that probably whatever is coming from the US markets on the night, our markets probably will not be responding to that. And that's the reason why we against what SGS Nifty was showing around 90 points down, we opened only 9 points down. And that also, as soon as the main action started at 9:15, we started actually in green, and from there on, the market just start picking up uh, the trend and probably the race. But now let's see what happened in between. So Canada has imposed a 25% tariff on US, and US investors actually are getting worried because it will have a lot of impact on the US consumers. It will have a lot of impact on the US GDP as well. So people got nervous, and that is now creating a balance between what US will try to do and how the world will react, and what is the maximum loss now the world can bear out of it. So now Mr. Trump has to think twice or thrice before imposing tariffs to such a large extent. He cannot have a one-sided show, because if he goes with this kind of one-sided show, his own markets, his own consumers will also start getting hit. So either it will be lost to the entire world, which US can do that. See, it's not that US has never done that. You can remember the Russia-Ukraine war, you can see the Iraq war. They don't think, because they are too high and they are too big to see the impact of all these things. It's the poorer countries which actually see the blunt of it. The developed markets still are able to sustain, especially the US markets. So if he can do that, but as of now, it is not looking like that. He will probably think twice or thrice now to actually validate his actions before he put them on paper. So that's one good thing happened. Surprisingly, with all these tariffs also being announced, I was saying yesterday also dollar index is going extremely downward trend. Today the dollar index has come to 105. Now this is the level when actually the Trump got his victory. So in November 4th or 5th, wherever he was declared as a victory in the elections, that time the dollar index was 105, and it rallied from 105 to 110 only on the rhetorics and stories of making America great again. That is why a lot of money started pooling inside the America, and dollar demand was huge, and we saw a large spurge of dollar index inching from 105 to 110, which is approximately a 10% increase. So, or let's say 5% increase. So, probably that was a euphoria which got generated, and people missed as usual, because US collects a lot of data, they analyze a lot of data, but they are very hard to see the hard realities, and that's the reason why they always fall on the face. They had to realize that the other countries can also reciprocate. It's not that If Trump will start doing his tariff war, people will just bend on the knees and accept whatever he is saying. Canada started putting tariffs. Mexico was ready to do it. European Union's tariff list is already ready. China has already put a counter tariff of 15%, and who knows, other countries may also start the race. So it will become America versus the rest of the world. That America cannot afford, and they don't want that, because don't forget one thing: if America is great, that is because they are, if at all, they're importing a lot of materials from around the world, which they have to, because they are $30 trillion economy. So they want imports, and also they want exports. So it's not that they are not exporting many of their manufacturing goods. That is because America himself has taken a call that they will do less manufacturing or whatever they can. They could not do it because of competitive disadvantage, etc., etc. But they are still exporting a lot of software, technology, banking services, and other things. If people start shutting their doors on their account, then they will have a bigger problem, much bigger problem. Anyways, they're suffering on fiscal deficits in US. It's more than 7.5% around that level. You can't afford these kind of shows where you become America versus the rest of the world. So they have to think twice or thrice. That is what has happened. That is what the change, and that is the reality check what Mr. Trump has to do. Now there are two conditions will arise. Either Trump continues with this kind of trade war, so dollar is still resilient to it, which means if he does that, actually money will come out of US and go to other countries. And if at all he does not do that and tariff war comes to an end, and we're already seeing signs of US economy slowing down, which means that Fed will come into picture and start cutting rates. In both the cases now, the dollar index should remain benign, and who knows, the dollar index which came to around 100 level in October 2024, we might see the dollar index at those levels once again. Remember, in India, the selling started in October 2024. 27 September was the day from where the selling started, and that time the dollar index was only 20. That was dollar index was only 100. Who knows that we again go back to those levels, and that time the emerging markets become more and more attractive and competitive. Anyways, if tariff war do not happen to a large extent, US will just keep on running as they are running with around 2% GDP growth, which does not make me excited at all. And with the kind of overvaluation that they have, probably a fall is due anytime in US for that matter. So dollar index in both the conditions should remain benign. It should remain attractive for FIs to enter into India once again. But people who are saying that dollar index was the reason for the fall for the market, that is not the reason, because in October 2024 we are on only at 100 level of dollar index. It was because of the euphoria of US, in from which actually the outflow started happening, and China, where they announced a lot of stimulus, because that time Indian markets were grossly overvalued. The first exodus of money started with these two countries, US and China, and they both played out very well, because the rally happened to an extended way. US also went up around 8 to 10%, China went up around 8 to 10%, and Hong Kong went up around 30%. So all these indexes, all this hot money earned a lot of money out of all these things. And at the same time, India started going down. So everything happened at the same time. There was a lot of euphoria in US and China because of various reasons. And at the similar time, at the exact same time, our earnings slowdown happened. That is the reason why you saw a lot of exodus from the Indian markets. But then now you will question that what happened on the budget day after that, because earnings was startly showing an upward trend. US markets also, the euphoria was already settled. But the bigger change what happened in around that time of February, first week or so, was a deep seek. If you try to link the charts of Indian markets and Chinese markets and Hong Kong market for that matter, probably to some extent the European markets also, you'll see that we saw that downfall because again the hot money went from India to Europe and China and Hong Kong because of deep seek, and because of a lot of defense spending which Europe is now starting doing, that pushed the stock markets higher for Europe as well. That's the reason why India paid the price for it. And don't forget, our Q3 earnings were better than Q2 but below expectations. It was below expectations. So that is the reason. Again, two reasons joined together, and we saw this kind of a fall. So this is just the context of what happened. Now again, what is happening is in terms of tariff war. So Canada is telling that they will stop supplying electricity to around 15 lakh homes in US. So they may retaliate in a big way. Let's see if it happens or not. Uh, U.S. Commerce Minister is now saying Trump is working on a middle path to have tariffs reduced from 25% to Canada and Mexico. Nobody's getting worried now. Nobody is bothering now for all these things. You do whatever you want. People around the world don't bother about US anymore now. And the dollar index is giving you exact reason why, in spite of doing all the things, it is coming down, which means people are now no more excited on the US enthusiasm. That's why the dollar is coming down. Moreover, in the first term of US Mr. Trump also, the dollar topped out at his inauguration and it never went to those levels again. Similar thing is happening in this term also. The dollar topped out at its inauguration, and now it is nowhere close to reaching those levels of 110. Both the terms, similar things repeating because he talks a lot, he gives a lot of rhetorics, he gives a lot of hopes to people, but actually on ground things are difficult to happen. It's not easy. The world is structured in a way you can't disbalance the equilibrium so fast. It does not happen that way. uh, Trump has told very happily to the farmers that I'm doing great things for you. Now my products will be accepted all around the world. People will reduce the tariffs for American farm products. So start increasing your production, everything for that matter. But he's forgetting one thing, that the fertilizer main ingredient, which is potash, 80% of potash in America comes from Canada. So we are so threaded between ourselves. We are so badly knitted between the different countries that it's not easy for you to unknit or probably untie all these things. It will take a lot of time and it will take a lot of effort. China has finished its national conference meeting and they've again set up a target of 5% GDP. We talked about this yesterday also. They are also putting the extra 15% tariffs on their American farm products and all those things. So I think America and China will keep on fighting. We don't expect that China will have any kind of going down in terms of US. They will continue to fight. They are both big countries, and probably China can slightly afford also. I don't know. But China is suffering from their own set of problems. They are in a big turmoil because of the consumption lack of consumption in China, which is happening, the lack of confidence of people on the Chinese government, the way they treated their technology companies, including Jack Ma company, Alibaba, and all those things, and probably the kind of overcapacity they have built in terms of machinery production, all those things, which I think our friend Nathan also brought out in his post. So probably all these things for China will remain spectacle, and the hot money will go and come out very fast. When will that happen? We don't know. Today, as of now, Hang Seng is doing good. Chinese allow, anyways. There are a lot of restrictions in terms of foreign money getting into the country, but a lot of people play Hong Kong because of that. So we don't know when this hot money will start coming out, but at some day, sometime it will happen because people don't want to travel a long distance on Hong Kong and Chinese markets. They travel a little distance, make money, and come out because it's very difficult to make money in China and Hong Kong for a long sustained period of time. That's what the history says for the last 15 years. Our Indian Minister, Mr. Piyush Goyal, today is in landing in US. He'll do his per term of negotiation, but I will again agree with I think the post which came from Nitin yesterday, our friend Nitin, because he's again saying that India should be on the front foot. We should have tough negotiations with US rather than bending our knees and opening the doors of US too much. See, US is also, you know, they're not very strong in terms of tariffs and all. Their economy is also very fragile, and we should not just bow down. But that's what I think you can just go through the post which Nitin has given. He's given some details on that as well. I perfectly agree with him. But let's see how India behaves because generally we don't, or at least India doesn't want to have this kind of a war with US. That's what it looks like. But let's see what the negotiation go on. That's my worry. What announcement will come today night from US? It might happen that we bend some things, and tomorrow we have some bad news on some of the specific industries. Let's see how it pans out. That is one other point that Mr. Our minister is there, and let's see what industry suffers because of it. Either it's a gain, win-win, or win-lose. Let's see how our negotiators do the job with US. Mexico anyways have told that they will announce the tariffs on Sunday. Before that, they will have a slight talk with US and Trump on Friday. If the things work out, they will not put any tariffs. Otherwise, they'll start putting the tariffs on Sunday onwards. That's what Mexican president has told. Nasdaq yesterday entered briefly into a correction territory, which means it was 10% down from its peak. Although it recovered a lot, so it's not closed below the correction level, but that is a kind of backseat now Nasdaq has taken, and it will take more. Nasdaq, according to me, is still grossly overvalued. It still should fall around 20-25% from here on also to become at a to come at a par value. I'm not saying it will still remain a fair value, but it is grossly overvalued. Nasdaq, I've been saying this for last a month or so. They are in a bubble territory. Nasdaq is really in a bubble territory. Dollar index coming down. Bond yield also at one point of time yesterday it was trading around 4.12. But once this market started recovering and Trump giving a hint that okay, I'm ready to negotiate and I'm not putting all the tariffs, then again the bond yields actually went up and we are now at 4.25%, but still well below of 4.8%, which again went up after the inauguration of Mr. Trump. So there also we are seeing signs of betterment, and probably a good reason for again the FIs to come back to India. We don't know when they will come, will do that, but at least the broader parameters are allowing them to do so. Yesterday, I think one more statement came, which came from Walmart, and they said that the average monthly spend on the grocery was around $6,700 per family in US now, which has increased to around $10,000, which means sorry $1,000. So 670 to $1,000. So again, the inflation pinch is being felt by the people. So that's again a small news. So that's the thing. I think one more thing which news which came is they are now fighting Venezuela also. They want to shut down the production from Chevron, which is around 20% of production from Venezuela. They want to again bend them, and it's again a negotiation technique with them. Very frustrating and very unethical. You're trying to blend these kind of smaller countries. I mean, it's just hard to believe. One more statement which probably Trump has given in his press conference that they want green net at any cost, this way or the other. So they want now territories, they want now real estate, they want now countries to also capture. So that's again a bad thing from Mr. Trump, and nobody will like it. He also told that he has signed around 4,400 executive orders. That's fine. He has been working good, at least for US. That's what he says, but we don't know whether it is true or not. Yesterday, European markets fall around 3.5%. Today, they have recovered the entire 3.5% of fall. And as of now, till the markets are showing right now, they are up around 3.2%. So they have covered probably all their losses. People are expecting that Trump may not be able to put that the tariffs which he's telling. So let's see. Let's wait and watch how things happen. So that's on the global front. Now, if we come to Indian markets, so Indian markets, we at least yesterday we broken a record of 26 years, 29 years, I think. The birthday of Nifty is on 22nd April 1996, where the Nifty index started. From there on, first time yesterday it happened that we've fallen for 10 consecutive days. First time in history. And if we remove that probably one day of 30 points up, then it has been 19 sessions. That much grossly oversold we are. And now at these levels, there is no reason for us to get oversold. I don't know why it is so. I'll just give you a small figure. So the Nifty EPS today is around 1140. That is the earnings if we take into account till March, if this quarter is over and we finish for the earnings. Of course, January, February, March quarter earnings are yet to come, but 1 quarter minus, we are today at 1140 levels. So even if you give a P multiple of 20, which the markets, from where it is rebounded every time, I showed this video on the 3-4 days back. If you do a P multiple of 20, then I think the Nifty value comes to around 22,800 kind of levels. And if we take a median P, which the Nifty has managed for last 20-30 years, it is around 21.8. So if you multiply 21.8 to the EPS value, the Nifty fair value comes at around 25,000, 24,800 to 25,000. So there is no reason for anybody to short the markets at these levels. Again, I think you will see the post from Nitin yesterday, which he has also mentioned the same thing, and I also believe so. Whether it is FII, whether it is anybody else, at least at 22,000 levels, it is very hard to short. 22,800 is a bare minimum level which probably our market should take a cognizance of. That is the reason why I always told that 22,800 is a big support. It should not get broken. I don't know it get broken because when you are in a downward trend, you probably outstretch on the downside as the way you upstretch the upper limit also. So probably that's a reason. But otherwise, 22,800 is the bare minimum level where we should have a fair valuation in terms of Nifty, very, very fair valuation. even if you're giving a modest 20%, 20 kind of a P multiple to India. The P multiple of India, people may argue that some people may give 18 also, but probably 20 is good because the earnings pickup we are seeing now. And the only reason why I'm saying this, the earning pickup will continue is the government has now projected a 7.6% GDP growth for this quarter. Now the problem is that the GDP numbers come very late, you know. So this quarter, January, February, March of 2025, this number will now come in May kind of thing. So it's very late, you know, and you have to only rely on those early parameters, which India is somehow we're not so good in capturing data. So we have to believe on what government is saying, and the number is showing a 7.6%. Today, the last quarter Q3 number has come to around 6.2%, which will be much higher. So 7.5%, 7.6% is much higher than that, which is giving me a confidence that at least we'll have a good earnings growth trajectory from here on. And that is why, probably, according to me, we should give that a median P multiple of 21.8 to India, which means that we should land somewhere around 24,500 kind of a levels. That is what Nifty should aim for at a medium term level. I'm not saying short term target, but medium term target. That should be the aim for Nifty going forwards. That's just the data is saying. That's what the number is saying. So, with all these things, yesterday also, if we come to our markets now, yesterday also, SGS Nifty was showing a lot of resilience. So, even when the US markets were down by around 850 points, SGS Nifty was down only around 120, 130 points. It was showing resilience. Day for yesterday also, it showed a lot of resilience when US markets on Friday closed, on Monday closed around 650 points down. Yesterday we were flat with only 30 points down. In fact, Bank Nifty was in plus. Today also, and today, good thing what has happened in the market today is that we opened negative, 9 points down in the pre-market session. And after that, whatever buying has happened on the screen. So gradual, slow buying. We first closed above yesterday's high of 20 to 125 kind of level from where we started. Then again 265 level, which was 2 days highs levels, and we kept on pushing those call writers on 22 200, 22 300 backwards. So a slow recovery on screen is always good when you are trying to put your gears in reverse order. Tomorrow's expiry, but I don't think it's the first week of expiry, and I don't think many of the shorts would have happened. But yes, after the gap down which we had on last week because of this tariff for on, that is probably the gap which Nifty will try to fill. Nifty will only become strong once you start closing above 22, 460, 470 kind of levels. So on a round off basis, we can say 22, 500 levels above, Nifty will start becoming strong. Uh, People who are short in the market, people who still believe it's a sell on rise kind of a market, then probably you put a stop loss of 22,500. And if you are a positional trader, you can put a stop loss of 22,800. If you still want to remain short, people who want to remain buy, I think I've been always telling that these are the levels to buy, and probably you should buy. 21,800 is the stop loss, because that is the biggest support Nifty has, and it will take a lot of time and a lot of effort to break those levels because fundamentally also Nifty cannot remain at those levels. There is one theory going on in the markets that Nifty should come to a level of 19,500. I tell you the logic for that, why people are saying that. People believe that the bull market started in November 2023. So October end levels, if you see, it was 18,800, but we came back from 20,000 levels. So if you take an average for that, it comes to around 19,500. So that is the theory which people are giving, that if the entire bull market has to shred, if the entire bull market has to fall on its face, then probably 19,800 from where the money started coming in, that is the kind of level which Nifty should reach. So you want to believe in that theory? It's perfectly your choice. My views on this is between October 2023 and March 2025, we have seen a lot of earnings. The market cap of the companies have increased, so we should not retrace ourselves to those levels because the earnings have happened. We are not in a negative earning cycle. We can only go back to the larger back numbers only when the earnings start retracing. We go into a negative earnings trajectory. We are not in that. We are in a positive earning trajectory, so we should never touch those levels on a fundamental basis. If the market want to remain oversold, if the market somebody is very grossly sitting on the selling mindset, then we can't help. Then any levels are possible. But as of now, nothing is giving us a reason for going at those levels. According to me, 21,800 should remain sacrosanct, and it will take a lot of time, a lot of effort for people to break those levels. You should imagine, you should sit back and see what happened in last 3 4 months. Why those levels, why those numbers came to us, why so much selling FIs have to do it. So again, as I told, there were two big reasons. One was China and US. People saw, or the bigger players, FIs, which are actually the biggest traders in India, they saw a lot of opportunity in China and US. At the same time, earnings slowdown happened. Our GDP growth came to 5.2%, 5.4%, and they got an opportunity. So the money flown actually from US, from India to US, China, Europe, Hong Kong. Our earnings was just slightly to getting recover, and the markets were slightly in a euphoric mode because of the budget and the RBI policy. But then this deep deepseek news came, and again we saw exodus of money to Hong Kong a lot. See, China, in October when the money came, China market actually came down, if you see. So that money again actually got hurt. And that is why you saw a statement from CLSA head that we did a big mistake by selling India and going to China. But this time with DeepSeek, people are very enthusiastic, and probably the way Mr. Singh met all the company CEOs of these tech companies, that has given a lot of confidence to these foreign investors, and they're still invested. They are still invested in Hong Kong, and I will not be surprised if Hong Kong still remains a good destination, and we see some positive uh, growth of their market from here on also. Even in spite of putting on the tariffs, we might see a rally in Hong Kong. Probably not in China, not in Shanghai index, but Hong Kong index, Hang Seng index, we can still see a rally because it's very tech dominated index. As you have a Nasdaq, that can still go on because DeepSeek can be a structural story. But will that happen on the cost of India? That is my doubts. I think it will happen on the cost of Europe, and it will happen on the cost of America. US and Europe, they will see probably subdued growth from here on in terms of the stock market uh, uh, returns. And India and China, and more importantly, Hong Kong should gain from here. That is what my theory says in terms of after analyzing all the things. DeepSeek will be a structural story. It cannot be a story of 1 or 2 months. It will be a structural story. That's a story which will remain, and which will sustain. Now, again, coming back to our market. So today, some good thing happened. So again, VIX was down, which is again showing you that the market participants are reducing their hedges. They are now probably starting to believe that the tariff war will happen. It will continue. It will not stop. Tariff war until Trump is here, it will always continue. But probably the pace of tariff will reduce. The impact of tariff will reduce. The countries will be able to meander themselves between this tariff related things, and those specific industries, specific countries, specific products, those will get a hit, and they'll have to rebalance in terms of their prices and all. There will be new supply chains getting made. Yes, it will happen. So there will be these kind of shifts keep on happening. Which country is going to gain? I mean, that is what you need to analyze and probably come to a conclusion. So if you see one more thing happened today, I think EU top leaders today are in India. They're meeting Mr. Modi, and the top agenda is defense and trade. So US, what will happen? No, they're allies. Europe was a big ally to US, Japan. Uh, you have this other countries which are close to US, Canada, Mexico. They are feeling the brunt. They're feeling the heat. They think whatever has happened in so many years, one president can wipe out those things in a single day, and that's not something which the countries can afford. And I will not be surprised if you will see some kind of defense export orders. I'm not talking about import orders. I'm telling about the export orders to a country like Europe, which India probably would like to make. And they will try to have a good trading mechanism between Europe and India. They want India to become a good trading partner to them. So, if you see overall, today again, Mr. Piyush Goyal is again in US. US can't afford to have one more enemy now in the form of India also. Already he has taken some kind of, some kind of problem with China, Europe, Canada, Mexico, Venezuela, Colombia. I mean, the numbers can only keep on increasing. So will he afford one more fight with India also, which is now the fifth largest economy? The answer is no. Probably the answer is really no. I can take my neck out and say the answer is no. So India is gaining from all fronts, and that is why I say that this will be a good, probably whatever is going to happen in this political and environment economical turmoil. India probably will become a leader. Who knows that today we have been talking only about China plus one. Who knows, we started talking very strongly on Europe plus one and America plus one kind of a strategy or a kind of a condition. It might happen. People will look towards India as well to become a good trading partner because the consumption in India is also very high. We are still a 140 crores kind of a country, and the age of population we all know is 20, 60 crore people are below the age of 27. So we are a country which people will look up to, and that is what is looking like the way Russia along all the war, the way India has managed the diplomacy between US and Russia has been phenomenal. Europe probably has no other choice now. They don't have any allies, they don't have any friend. They have to come to India. That's the second advantage. US can't take any animosity with India anymore. They should not afford. And I know he's a mad person. Trump can do anything, but if some sense prevails on his shoulders, on his head above the shoulders, he will not do that. That again can become a big beneficiary to India. And with the kind of levels we are at, 22,000 levels, it's hard to believe that probably uh, we will see some kind of bad things from here on. Yes, today Mr. Piyush Goyal, I don't know what he will agree or not, but probably, I don't think we should have a very bad situation that we lose so much. I don't think our government will also bend down so much. Let's see what happens. One more thing is if US starts becoming good, if US start at least reducing the tariff war, again IT will start becoming attractive because it has corrected a lot. So keep an eye on that. Again, if you see some of the reform which Trump is trying to bring to their own country, he's trying to reduce the Fed budgets a lot. He's trying to reduce the government spending in the sense the government expenditure a lot. Dodge, which they call it, that thing is reducing. He's already told that whatever saving they are doing, they want to reduce the debt, and they want to give that money as an incentive to the people over there. That will increase some kind of consumer spending there as well, which will be in turn benefit to the companies of US, which means again a good thing for the IT. Uh, Although there will be slightly negative IT companies in terms of rupee depreciation now, the rupee will not depreciate now. And one more thing you start seeing in rupee and dollar terms. So when I told that on October the dollar index 105, a rupee was at 83 kind of level. And today again from 110 level, the dollar index has come back to 105, but rupee is still at 87. Today we are around 12, 13% stronger, but still at 87. So 4 rupees cut is still there even when the dollar index has come down to 105. That is because we have to align our currency to the other countries. People are reducing their currency value to align with the exports. They want to keep their exports still attractive. That is why they're reducing their currencies. Uh, uh, China will do that a lot because now they have to face 20% tariffs. So that is why Indian currency will find difficult to reach to its pre dollar index levels. It will remain in that way. Probably we might see some kind of deterioration also, but we'll not see much improvement in our currency value. That's what I think, because we will also want our exports to remain competitive with respect to China and all. And China will have no choice but to reduce the currency value. They have absolutely no choice because they are not going forwards for any negotiation. They will not do that. Also, it's a big second largest economy in the world. US will never do that. So this kind of tariff war will continue between US and China, and they will continue to devalue their currency in that way. So India probably has to match those currency levels. So IT will again remain attractive because of two things. If at all a tariff fall reduce, then IT will gain because you will see some kind of stability in US markets. If that happens and the growth numbers, if at all they're not looking good in US, then again Fed will come to cut the interest rates. That is also again good for the IT companies. So again, both scenarios, as dollar index will remain subdued, it will be good for IT companies also. So IT is one sector which you should uh, probably now focus with the kind of correction that has happened. It is looking good from these levels. Banking, anyway, we have seen in India, it looks very good. So is whatever earnings slowdown we have seen in the other companies of Nifty, at least banking have not given you so much of a surprise. Yes, our credit growth has come down from 15% to 11%, but that is because the RBI has cut down the unsecured loan credit very, very drastically. And the kind of norms they have put out, they reduced the liquidity by 3 lakh crores. They were, risk weightage was increased. So a lot of tightening was done by RBI to reduce that credit growth, and it still could only reach to around 11%. But now, whatever easing Mr. Sanjay Malhotra is doing, our new RBI governor, the market is very confident that will again reach to a credit growth of more than 15%, or which we have been enjoying for so many years. Which means our earnings were not cut or very minimally cut. Now we're in a growth phase again, and we are already corrected a lot, and with kind of budget provisions and RBA policy advantages which will be gaining to to these banks. I think banks are really positioned very well, extremely well. They are extremely good position. So I think these two sectors are looking extremely great from here. Apart from whatever comes from our internal growth consumption story because of that 1 lakh crore extra which has been given in the budget. Uh, so one more thing is on the small cap and the mid cap index. See, small cap index and broad cap and mid cap index still remains overvalued. But today also you see small sign of Nifty going up. We were up around 1.2%, but the broader indices were up around 2% or more than that. That kind of euphoria and that kind of outperformance, it looks like it will still continue. So whatever we say that the comfort is in large caps, the comfort is in going to Nifty companies. They are fairly valued now. Mid cap and small caps looks very grossly overvalued. Still, the euphoria remains on these indexes only, and probably that will continue. So that kind of froth, that kind of risk, still remains in mid cap and small cap, and probably that will continue for some more times. Look like that because anything positive happens on markets, you first see a resilience, you first see a euphoria in small cap and mid caps. So I don't know it's right or wrong, but just wanted to tell you this thing. But small cap and mid cap are still overvalued because the earnings have been pretty less, and with the kind of growth they have shown. So just give you an example. In last 21 months, mid cap index has given a return of 110%, but the earnings growth has only been 50%. So that is the kind of although they have corrected on 25%, but still it is overvalued at on the index level. So that is the kind of you know misalignment, or let's say mispricing we are seeing. So be careful. When things remain overvalued, you will see large corrections. So if you can handle that kind of pressure, fine. Then you remain in small cap, mid cap. Otherwise, on a comfort level, on a valuation basis, actually banking industry, NBFCs, consumption stories, your IT, pharma, all these are giving you good levels to buy, and these all remain a structural story for India going forwards, and considering the macro environment around us, and the valuations are really good. So in that way, so if you want to have a good sleep, probably these are the companies to buy. But if you can take risk, and if you're not bothered about short term fluctuations, then it's fine. Then you can continue in those companies. That is probably it's entirely decision is yours. I mean, nobody can. My outlook here is to just give you data, just give you my understanding, just give you my point of view. This decision is always probably yours. That's the way things goes. So we are not out of the woods as yet. We cannot say that probably we are out of the woods. Nifty have to still give a strong close, and the seller, we don't know. We only see comfort when the seller become buyer. So if the biggest seller becomes buyer, then probably we'll be out of woods. So we want FIs to actually become sellers, net buyers from sellers. We want them to buy, and they've been buying in FNO segment for last 2 3 days. I've been giving you the data. Yesterday also there was buying in FNO around 2,500 crores stock futures were bought. Index future also I think some slight buying was there. So but cash again they were selling. So once you see the kind of delivery based buying from FIs, you know, cash buying, delivery based buying, that is the time you can be rest assured that the market has taken a U-turn. We are now inching upwards. And in India, the biggest problem is there are only one entity which is seller. Everybody else is only a buyer. Our DIs buy, our pension funds buy, banking funds buy, retail buy, Everybody is a buyer. The only seller in India is only the FIIs. So if you want shares, if you want delivery, you have to only depend on FIIs. If they start becoming buyers, you shoot a lot and you shoot very fast. That is what happened after the post-election rally. I think the market was around 23,200 kind of level of the exit poll of 4th June. Nothing changed. Nothing. Earnings didn't come up, and we reached from 22,200 to 26,300. 3,000 points gain just in 2.5 months. The reason was that the seller became actually the buyer, and rest nobody wants to sell. And that's the biggest problem with DIs have. Arey bhai, if you don't have the earnings, if your market is becoming overvalued, when the promoters are coming and they started selling, a lot of QIPs came, a lot of promoters came, even the government was selling. Who was buying FIs and who was not selling is more important. DI was still not selling. If they would have sold at those levels, probably I would say less fingers would have been burnt. That is their job. You can't allow the markets to actually go up overvalued because of any other reason. And if you're getting our money, it's not that you start deploying our money at higher levels at valuations which are extremely undesirable and extremely uncalled for. And after that, you come back and say, stop your SIPs. Everything is froth. We told you a lot of number of times that this market is overvalued. I tell you what the FIS people, what the mutual fund manager was saying. Arey, it was not my decision. It was your decision. You were continuing your SIP. You only told that you only gave us a mandate that is invest in small cap and mid caps. We have to follow that mandate. You know what does this mean? This means that I have to have a third financial advisor first with me, who will inform me whether I should do SIP or not. If I am doing it, which amount, which sector, whether small cap, mid cap, large cap, or a multi asset or a multi cap kind of a thing. All these gyan has to be given by my financial advisor first, and then you very happily will come and start investing money in some country, some company here and there. And when it falls, you says, okay, it's not my decision, it's probably your decision. That's the kind of what do you say? Money management is happening in our system. But if there was a euphoria, the first paddle, the first break should have been from DIS. It never happened. And that's the reason why that 3,200 point became a froth. And we retraced those levels because earnings are not there. It was purely a gimmick. It was purely a what? An anticipation, an assumption. And you all know what has happened to the investors' money. We lost $1.2 trillion of market cap. What advantage does anybody have in taking the market cap by $1.2 trillion in 3 months and then again bringing back those levels back in 2.5, 3, 4 months? Nothing. Nobody gains out of it. It can be a slow increase. So DIs have this role. They have to put pedals. They have to put brakes. I don't know why they don't do. And then you're giving good exit in October, November to FIs. If they are selling and if you also feel the market is overvalued, you should have also sold. That would have allowed the markets to come to 22,000 levels in just 1 month or 2 months. But it took 5 months. So we should be careful on these fronts, and that's the reason why I think we as investors have to become much more knowledgeable. We have to remain informed because now everybody says that it's our decision. So if it is our decision, then we have to remain informed. We have to be. It's not that we can quit the equity markets because that is the only market which actually is allowing you to beat inflation, or probably gold, which has done in last at least a year or so. But otherwise, a person have to become much more knowledgeable to take his decisions in where to invest, how much to invest, when to stop, when to actually increase the SIPs and all those things. So that's a unfortunate part of it. So with this, probably I'll end my video today. Thanks so much, and thank you for listening to the analysis. I hope you liked it. Thanks so much.